Our fourth session is about masterclass on unmasking financial crime, money mule detection with AI. Let's put your hands together for Mr. Singla, Head of Data Science, NPCI.
Thank you. Thank you. Okay. Good afternoon, everyone. My name is Saurav Singla. I'm from NPCI. I am there as head of AI, taking care of fraud and mules, and even on LLM projects. Today, I'm very privileged to be part of GFF to talk about our journey, what we are doing in NPCI for mule detection, which where we are working on some kind of a population scale of data, where we are working on more than 780 million profiles just, and we are getting the daily UPI approximately 730 million just UPI transactions. Talking about, we have other products also, and we are building models to solve this problem because the way the digital payments are increasing, right? We see there is a big problem of money mules is also increasing because they are helping indirectly the fraudsters, even the criminals or even the terrorists. So somehow we are helping banks, giving them early alerts so that they can take necessary decisions regarding the accounts. And I don't see this is a problem just in India. It's outside India also. These kind of problems are there. So my journey is with NPCI for 2 years. So I started with roughly when we started Money Mules, it was nearly 2 banks. Now we are live with more than 450 banks where we are sharing our alerts. So want to start on that. Now, firstly is the slides talks about today agenda is on what is Money Mule. I think you guys a lot of might have aware about what kind of workflows we have to enrich this population scale of data, because some of our look back period are 12 months and 6 months of accounts to understand their cross-platform behaviors. Then we are talking at high level today about what kind of AI models which we are using to catch them. And last is we are using NVIDIA GPUs to work on this population scale of data, where we are trying to somehow, connect these nodes, which are accounts and edges as their transaction, and trying to understand their temporal behaviors, which could be temporal graphs. Now, firstly, is what is money laundering? So, money laundering is something to do with illegal money, or the money which is coming through frauds, or it could be something with gambling or shell companies. That's how what we identified. The money is layered and integrated. This is on the first slide, which is on money laundering. And this problem is increasing, I see, month on month a lot. And we are trying to help banks on those sides just based on data, because we don't have any demographic data at the moment. We work purely on transactional data. So if you see here, basically in this, if you see in the bank scenarios, they can understand from bank A to B, they have that much visibility. But we have wide visibility. We can understand the hops, how the money is moving from one bank to another bank to third bank. So we can do hop analysis better. And there are three kind of accounts. One are purchase account, one are rented, one are unauthorized without the account holder knowledge. Those accounts are taken over. And what we have seen is they always have very low fund retention. If they receive 100 rupees, they take out like more than 90% of the money within maybe in 10 minutes. So they take out money very quickly and it goes flash, maybe up to 20 hops, the money goes. So we have to take early how to find out those. We use NVIDIA GPUs to understand that. Again, for unknown, what we have seen is unemployed people, people who are financially distressed. They are being used, they are being targeted through social medias to join them. Next is somehow these people are like they are giving their accounts on rent, and these people might be sitting in villages. They go there and they get put the whole maybe 1,000 accounts on rent. They have a chartered account sitting there. They know they are being trained how to do KYC. So pretty much it's a big nexus. It's a chain of mules how they are working on. And the next is on these accounts are somehow sometimes purchased also. So these are the three ways what we identified. These are the three type of mules. And what we have seen is since we have a look back period of in some models of 6 months, some models even a year time. So our monthly UPI transactions are roughly 20 billion transactions. If our look back period is 6 months, we are processing up to 120 billion of transactions to understand population profiles, what kind of dormancy behaviors they work on. So suddenly some account maybe doing 10,000 or 20,000 monthly transaction and suddenly started doing 20 lakh. This is one way. Before dormancy, and there was a silent period, and after dormancy, there is a big spike. Next is we have a lot of other ways we build features, which is on new payer with lot of payees, fund retention. We try to break a single day into 5 hour slot. So means we have 4 slots, and we try to see what kind of cyclic patterns which are coming reoccurring again and again on the balance side. Is there any bulk transfer going on? Is there any contact? Is there any pin changes happening with the device changes? So we even get all kind of financial transactions and non-financial behavior, which we use to understand the profile behavior. Next is on impact. The impact is what we have seen is the financial crime is one which I was talking about. The cyber crime, which could be social engineering side. And somehow with this, it is the big impact on the banking ecosystem also. People lose trust, economic impact, and lastly is a lot of people are being put under fake jobs. They are being told to go with mules. So these are the impact of mules. Now, if you see here, we have put into on the left-hand side are the financial transactions. These are some of the high-level features which we use to understand what is their proportion of money which they are moving out or the money which is coming inside. The distribution of fund, how much money they are moving to spending as peer-to-peer or peer-to-merchant. At what time of the day, multiple PSPs. So we have more than 350 features just on the financial transaction side to understand the user behavior. And next is on non-financial transaction. We can understand the location. We can understand the account setting. We can understand are they changing a lot of devices. There are multiple ways we can understand the behavior. And after the device changing, any withdrawals are happening through ATMs. Now talking to on what is our approach. So we have a factory mode kind of a model where we have in fraud scenarios more than 70 models running parallelly, and each model hit the each transaction, which is roughly daily 730 million transactions. When we process those transactions, those are processed within 50 millisecond, 95% of the transactions, which is up to 780 million profiles. And similar way for mules, we started this journey short time ago only. So we have a factory, again, kind of a model, which are 17 models. And each model work on particular MO. So this is the more way of give an explanation to bank. We give this is the only the white box modeling. Second thing, we work since we don't have any demographic information of a customer. We purely work on graphs. So in the graphs, we try to connect all transaction as web of transaction, and then try to, because I am not from payment domain. I have worked in healthcare in multiple domains. So what I understood is if you work on graph as a technology, you don't need to have a functional knowledge of that particular domain to solve the problems. And believe me, it is better. It is giving better result than functional knowledge of the features. So we use a lot of graph structural features as an input to for AI models. Then we have a plug and play kind of a concept where one of the model, there is a mother model running inside there are more than 70 models. So if one of the model is not performing, it is getting checked, and if we can take it out from production, there is no impact. And we even work on LLMs with academic partners like IITs and ISCs to generate a lot of synthetic data, because we know these kind of mule activities of fraud are very less samples. So we need to generate more scenarios. For generating those scenarios, we use LLMs to generate those kind of synthetic data, which can be used as an input for AI models. And lastly is maybe 6 months ago, we used to train models, and maybe the next training was meant to be done maybe in months' time. These days, what we have seen, there is a lot of data drift and feature drift. So what we understood is a lot of people or these money mules they are understanding we are catching them. So there is a lot of drift. So we have to regularly retrain those models or bring new features out to have the lesser false positives. This is at the high level. We are using the, if you see on the top left, the financial and the non-financial transaction. Then we do data enrichment with multiple features, which could be graph topological features. And then the next modeling part, then we do the mule predictions, which are shared to banks, and banks share us the feedback as per the guidelines. And we even work closely. We get data from, not just from banks, we even get data from MHA, CyberSafe, which are the mule kind of, and even from DOT. So we try to use multiple kind of data to understand the user behavior. So what we understood from the graph is, if there is a good person, a lot of good people will be sitting surrounding to him. If it's a bad person, a lot of bad people will be. So there is always effect. So we try to use those kind of graph behaviors to understand the user behavior. Next is on, this is on the data enrichment side, which I earlier spoke about. These are the features. Every day we are coming with new features. We have more than 350 features. Graph also, we have more than 100 features. If you see on the topology side, we use PageRank, which is again a Google built. We have a PageRank which run on the both side, left and right hand side both. And we have other kind of customized metrics which we use in graphs to understand the mule behavior. And rest are, some of them are velocity, which are real-time features to understand the user behavior. The reason is why we use graphs are basically what we understood is the traditional methods. We at the start we started with the traditional. They do help, but they were not able to understand how the edges increase over, means the transaction increase over time. We are not understanding two hops neighbor behavior to the main account. So these kind of possibilities are there here in the cases of graph. Secondly, what we understood as per our behavior experience is a lot of times, most of the time, the data are very imbalances. So what we have seen is graph works even on imbalanced data sets. Obviously, it comes with network analysis in a better way, and it even do better temporal behaviors also. And lastly, since I am not from payment domain, it is helping us a lot building such kind of smart features to detect mules or even frauds also. First, we want to talk about community detection. So in community means what we want to say is there are group of people which are basically group of people which are controlling that community. So how we can find is, so we work at population scale, and firstly is we try to identify the cluster which are suspicious. So we have developed some kind of metrics within the graphs. First is the assortivity. So assortivity means one to many means one person is sending money to a lot, and is their neighbors are also having that kind of assortivity. So if we see those kind of assortivity, those are not random, those are specifically done. So this is the first part. Next is we go with the cluster coefficient. So in the case of cluster coefficient, we want to see how the density of the graphs are. So we have certain thresholds where we can identify, and then after that we have node level features after that to identify which are the group of mules which are controlling directly or indirectly those mule activities. Next is on cyclic side. So cyclic is something about where money goes and goes from A to B, B to C, and from C to A it comes back. So it's the way the how people making their money black to white and white to, so they want to show expenses. So here if A is sending money to B and B is sending money back to A, so there here the reciprocatory ratio will be always much higher. So we will try to see in those clusters, firstly the whether the reciprocatory ratios are higher. Secondly, we try to see the Gini which is coming from economics. We want to see how many nodes are controlling majority of the transactions. This is the next part. And the third is small world index, where we try to see we see each cluster as a world, small world, and we try to see how A can connect with C through a shortest path, which can be used by Uber, right? Uber, how algorithm work. So we want to see how people can touch from one point to another with the shortest path. So we have some kind of a metrics to come up to small world index. So firstly, we have these kind of index to identify the suspicious group of people. And from that, we want to have higher probabilities. For that, we have additional feature, means how A is sending money to B, then B is sending money to D, then from C it's come back to D, A. And again, every time A is sending, but its beneficiaries are changing, but it's again coming to. So we want to see the diversity ratios. So we have diversity ratios also to understand the cyclic side. Now coming to one-to-many side, we want to see how the money is getting breakup. Means someone has received 10 lakh rupees and then he's transferring to 20 people 50,000 rupees. And it could be a normal pattern, but we use here again graphs. Firstly is to entropy. Entropy we use to understand if there is a randomness or is there is something else. Then we have eigenvector centrality, reciprocatory ratios, which I talk about, and node eccentricity. So if anything, if we see if one node is connecting to these kind of nodes and their distance is very far, so these are they are sitting in the corner and they are somehow controlling the mules. So they are, you could say it's like a parent mule controlling other mules. And next is on here we use graph. Firstly, we know we get reportings through frauds, through banks. We even get reporting through MHA and CyberSafe. So we know from these points the money might be moving to mules. So what we do is we draw a graph. Then for their neighbors, we try to see their 6 months behavior with each day with the 5 balances, which is 5-hour balances. And we have a look back period of 180 days and 360 days to understand how much money in each 5 hours is coming in and how much going out. And we want to see what kind of minimum balances they are keeping. And after that, if you see, and in the graphs also, normal versus mule, you would see the balances are less. And on top of that, we use signal data, which could be FFT, fast Fourier transforms, to understand how they are as compared to the normal. So we have some certain thresholds for normal samples versus something which is going beyond those signals. And next is on Markov chain. So Markov chain is lot applied in, I see, in marketing domain to understand the user states, how they are interacting on the websites till they make some purchase. So I have worked with Siemens, so I thought let's use something into payment domain in Money Mules. So what we have done is we divide each user's uh, 12 months behavior, and each month we have their weekly behaviors. So if I have a weekly behavior in 12 months, I will have 72 features for each, right? So what we do is then we try to see how many times he has gone to dormancy, how many times was he a good citizen, how many times he was a bad citizen, and we try to see the states of a person, how many times he has done repetitive transaction, how many times he have done round transactions, how many times he is doing first transaction of 20 rupees, then 30 rupees and 50 rupees. It is going in certain sequence. And some people do maybe 1,000 or 1 lakh transaction of 2 rupees. So they have done 2 lakh, but they break the money that way. So we try to have those kind of states. And once we have those states, we calculate their probabilities. And after that, we use simple state vectors to understand that. And believe me, this is giving us more than 60% precision. It's a very scalable solution, which we have, I think I have applied a lot in marketing domain, but we thought let's apply it in money mule detection. And it is not that part to graph, but it's as per the effort, the ROI is better in this Markov chain. It's helping. So here we have a lot of states which we identified. So we want to see how many times you went to particular state. Next is on reinforcement learning. We have a lot of label data, but we wanted somehow a simple actor critic model where we can refresh the weights based on the feedbacks coming from the bank. So what we understood is if we, and in this we have a concept called EWC, which is elastic weight consolidations. So we want to remember some important weights which are very critical patterns of mule, which were used to occur maybe 4 years ago. And we don't want those kind of, we want those kind of trainings to be there, part of this. So we use reinforcement learning for model updates. So this is one part. Next is on money trail mule detection. Since we have graphs, we have lot of, we can understand the in degree how many people are giving the money. Out degree means how much people money are giving out. Are there any new beneficiary coming each week or new remitters coming each week? So we have those kind of feature, and then we draw the graph. If you see, the fraudsters are the red ones, and the mule ones are the pink color one, and the white one is the normal. So we can understand from here, we can easily see the chain has started from here, hop 0, but we can go further from these hops to understand the user behavior. This is on Money Mule. And next is on, this is a very high level GPU architecture which we have, where we draw the graph, where we use PyG, CUDA environment to build the do the retrainings. Since we work on this, population scale of data, we try to feed in these NVIDIA's GPUs in mini batching, where we don't want to break too many edges. We want to have all kind of properties intact. So these are used with the PyG, and we use NVIDIA. We work closely with NVIDIA's to have these kind of capabilities. Earlier, we used to take, I think there is a 45x improvement in our model retraining time because of working with NVIDIA GPUs as compared to earlier we used to work with Arango DB or Neo4j. So there's a big improvement using the GPUs architecture for mule detection. Any questions?
Before a account is a mule, it is a normal account, right?
Yes.
And once it has become a mule, the account is having a high traffic volume and velocity is very high. Yes. So then how do you prevent money leaving the banking system? Because if money has left, nothing much can be done, right?
So I will tell you, in the case of mule, we are as per the Indian law, we were only meant to share alerts. So after once we share the alerts, we share alerts to FIU, which is Financial Intelligence Unit. We share alerts to banks also. And once we share to banks, then banks do the necessary due diligence from their side. They have certain time as per the RBI guidelines. They have a certain timeline. They have to do the due diligence. They may need to call that person to branch or get all the documents validated, right? So our responsibility is to share up to alert. So in the case of Mule, we are only allowed to give alerts, but in the case of fraud, we have the permission to decline. So once bank understand there is some suspicious activity, they have the option to do partial freeze, which could be debit freeze or credit freeze, or they can do full freeze.
Okay.
Right. But we try to make sure that we share alerts to banks early.
And typically, how quickly do you get the account transaction details every day, every hour?
Every hour. So there are some models which run on daily basis, some runs on hourly basis, some runs on every third day basis. So all has different capabilities. But as per the law, we are only there to inform regulated bodies and banks. And banks do their due diligence before they're taking any decisions.
So the alerts that are given, are there like what is the percentage of false positives in that, and like what is your experience on that, and how do we reduce that, or how are you reducing it?
Yes. So right now, when we started this journey a year ago, our precision, not accuracy, precision was approximately 40 to 50. Now it has crossed above 60%. So if we are sharing 100 alerts, 60 are correct. And in this, what we have seen is not just our internal capabilities, it's even the bank support. So we are getting regular feedback from bank side to improve those models based on their feedbacks. So right now, consistently from couple of months, we are at 60% precision.
This is regarding while you're training the model. So you must be using some sort of labeled data or unlabeled data, whatever it is. But so let's say for data that you know it is mule, like this transaction refers to mule accounts, you must be getting it from banks or MHA. But for the data which says that it's an okay transaction. So while training the model, so there must be some sort of polluted data in terms of the data that you haven't identified as mule. So how do you deal with that challenge? Or maybe some.
So we get regular feedback from banks. So based on that, we even do soft labeling,
Okay.
pseudo labeling. So we do pseudo labelings plus even the bank labels to based on certain assumptions, certain MOs. We use that as part of training. Uh, so bank feedback is one part, but we have some models when we started, like the one I was showing you, the temporal one. There, we initial days we were not getting the feedback. So what we did is we took at population scale what is the normal human being uh, behavior is, and then we try to see anyone crossing those threshold, right? Certain, right? Those are suspicious. So we were using those as a training at the start point. Still, we use those kind of data points for training, even for reinforcement learning.
So you showed right now that with after the detection, maybe the cycle or the loop of the money laundering, it's identified into fraudster, mule, and let's say normal. So, like till what point it continues to be normal, or soft label them like you said to say ki tomorrow right now, let's say it's a normal thing, but since they are in that same chain, probably it goes back to that cluster of a money laundering or a money mule. Or is it kept on all of them, but the alert is sort of given in, this categorization?
We started with firstly with 3 hops when we started our journey. 3 hops from the point of bank, right? And gradually, from suppose we find any suspicious within those 3 hops, then we jump for the 3 hops from those suspicious load, and this is the endless chain. And sometimes what we find is finally you will have another kind of a mule which is called as accumulation mule, which accumulate every money and take out it through some other platform, maybe through NFT, RTGS.
Okay, okay.
Right? So there are accumulation mules also sitting. Maybe they're sitting at 10th hop, maybe 20th hop. Possible.
So you're saying that even in the randomization, if they're not caught, let's say for the first month, because you are doing the graph method, they'll probably be, detected or picked up. Chances are they'll be picked
Yes,
up.
but if you see those suspicious communities which I was showing you, those in suspicious community they will be easily caught because there is no hop. We are running on the whole population.
Got it.
So, I have a question now. Does this cover all modes of transactions like NEFT, UPI, RTGS, all channels? And second, to follow up on that is, does this data in some form feed into mulehunter.ai, or is that a separate initiative tool altogether?
Okay, so Mule Hunter, I think that is from our Reserve Bank Innovation Hub side. For our side, we use our ecosystem data. Our ecosystem data is of UPI, firstly, IMPS, NACH, government benefits, right? NFS, ATM machines. For now, we use these for NFT, RTGS is not part of us. I hope this answer.
Thanks.
Hi. Hi, Krunalia.
Yes. Hi,
Yeah.
Kunal.
So I think the part of my question is answered in terms of what is the coverage of the products which you use to identify. In one of the slides, you mentioned that you identify the activation of accounts, sudden activation of accounts. Is it only by what I understand is it's only when they transact. But what I also understand in UPI, there's a model where the account the UPI VPA gets inactive if it's not used. That is also there to prevent such usage of Mule. So how is that being parallelly
So we
leveraged?
have mobile number. If you can have 4 VPS, we check here across all the 4 VPS. It might be one win inactive, maybe 3 might be active. So it's across all the VPS which you are using it.
Okay. Yeah.
Yeah, hi. First of all, great session. Thanks. I have a question. The efficacy of this model largely depends on the amount of data that is shared with you. So let's say there's a payment that is disbursed across 10 hops, and the fifth and sixth hop, the banks in which these accounts are there, they don't share the data with you. What does it mean for your model? Does it create a problem?
Yeah, I will tell you, you're right. especially even in the fraud case, we don't get support. We are in the fraud case. We are live in more than 600 banks, and in Mule 450 plus banks. But believe me, I think maybe 30-40% bank does the feedbacks, give the feedbacks. So if bank they don't do, we do even share this data to regulated bodies. They take necessary action. So it goes from there. So even do we do checks after the alerts? How is the activity on those accounts alerts we have? And see, a lot of accounts we see zero activity, means those got freezed.
Hi. Can I? Yeah. So anything on security market related aspect, if there are mules, because ultimately in security market, finally the mules will receive money or pay the money kind of. So any module where that can be caught? So,
Can you repeat?
yeah, so security market related frauds, if it's happening and there are mules being used for that.
Okay.
Is there any model to catch that? Like funds are coming from the brokers or so and being paid, or people are collating money from many people, and a person is collating money from many people and putting it in financial market or.
Yes, we do, but I think that kind of classification, we do have accumulation where people where they're moving into this crypto. And so people they are, so those are like hub and authority kind of mules, which is again from the graph learnings we took, where people accumulate and then they move out. But from security, we don't get that much information regarding on those. Yeah, thank you.
Yeah, hi, Chetan here. So when you explained this mule operations, right, the last leg, which is accumulator and then the money moves out, it can be either through ATMs or through crypto. Especially in case of crypto, when it goes out, are you able to detect that the money went out through crypto?
Uh, we have some sources to we know.
Because okay,
We have.
I'll just finish. The reason why I'm asking is if the money went out of crypto, then it's a high probability that they are part of the criminal network. So if we are able to detect that the termination node is linking to crypto payments, then that feedback can be provided back to the banks. So is this something which you are working on, thinking on?
We have sources through which we find these kind of accounts, and we closely, use as a input for our model retraining purposes, right? But again, they need to go through certain behaviors which are part of mules before, because we want to control, we want to give, control the false positives. Uh, so yeah, we do have sources to identify.
Hello. You mentioned that you get hello. Yeah, you mentioned that you get feedback from the banks, but for a bank to actually tell that this is a mule, which is how you get the label for your supervised learning, do you really get it at scale? Because it's, I mean, from a bank's point of view, it would be very difficult to actually identify, investigate, and identify that this really is a mule, so that you get your ones and zeros in the labeling. Do you get it at scale?
I will tell you, in the case of fraud, our feedback is less than 1%. In the case of mule, it is up to 10%. So I think 10% is a good, decent data for the retraining purposes. And since I said we use graph as a capability, data is always imbalance. Because a bank, they don't have that much time to give feedback. They will pick some random samples and they will give the feedbacks. Yeah. Thank you all. Thank you.